Hello, everybody. Welcome to Aras FX. I'm your host, Aras. Let's break down price. I'm going to give you three. I'm going to give you three things. I'm going to change. I'm not going to change your strategy, but they're going to add to the effectiveness of your strategy, whatever strategy you are using. Excuse me. Let's get right into the video. First thing, displacement. Second one, inefficiency. And the third one is using a POI that overlaps with these three: displacement, inefficiency, then using a POI. Sorry, excuse me. No, don't touch it. As you can see my screen, let's just dive right into the video. As you can see my screen, we have a solid market structure here, price change character right about here. I have a solid market structure, price change character when it broke this higher, this lower high. Sorry, higher low. Yes, this higher low is higher. This low is higher than this low. So price change character when it broke this higher low. Now, time and pen here. Market structure, market structure, market structure. Now let's talk about displacement. Displacement is institutional intent. Yes, you heard that correctly. Displacement is institutional intent. When you see a full body candle take a key level, either a low or a high, or breaks out of a consolidation, a range, that is displacement. A full body candle, not choppy candle, a full body candle. That's displacement. Like what happened right here. This is displacement. This low that was taken, this is displacement. Full body candle. Then inefficiency follows displacement. If there is displacement without inefficiency, without proper imbalance, it's just decoration. Don't be interested. Don't be interested in that price action. Now, how does displacement works? How does it work? Market structure, it must tally with the higher time frame bias. Must tally with the higher time frame. If displacement happens now and the higher time frame is bullish and you are expecting sales, it will go against you. It must tally with the higher time frame bias, with premium and the discount zones. Now, inefficiency follows right after displacement. Inefficiency follows right after displacement. Inefficiency, fair value gap, imbalance. When price doesn't trade fairly, it moves from order flow. It order flow moves in a particular direction without trading fairly. Moves very very fast without trading fairly. That is displacement. Inefficiency is the gap that is left. Though that gap signifies that yes, there's already, it confirms the intent of the institutions. Inefficiency, imbalance, that gap, three consecutive candles without closing anyone's. Retail traders, they are like staircase. If there's a story building, like going to the first floor, they take the staircase. That's when you see choppy price. But institutions, they move with full body candle. That's intention. Now once you see displacement, that's intention of institutions. So whatever strategy you are using, whether you're using SMC, you are using support and resistance, you're trading key levels, whatever strategy you are using, excuse me, whatever strategy you are using, if you can if you can spot this displacement inefficiency, then once it overlaps with a POI, a breaker block, an order block, a QMR, Quasimodo reversal, Quasimodo line. Once it, and you know that a fair value gap can also be a POI. Yes, it can. But there is a why. There must be a why. I'll talk about that in my next video. Why a fair value gap can be a POI. But this video is all about imbalance, displacement imbalance, and using a POI. Now, let me give you an example before I end this video. Now, this is DXY. This is DXY. This hmm, this lower low right here got taken out. This displacement right here, this displacement got taken out with a full body candle, got taken out. Then price left a gap. Price left a gap right here. This was a gap. This gap got traded into, it got balanced up. The imbalance got balanced up by by buyers. Sellers moved too quickly. Buyers had to come and balance it up. It wasn't trading fairly when order flow moved so fast. Now buyers came to balance it. Then if you see right here, this is a breaker block that price used. This daily, let me scale to, in daily is a breaker block. What does 4 hours say? 4 hours says this is an order block. The last the last bullish candle before the sales. If you saw in daily, that was a breaker block, but in 4 hours, this is another block. So what if you saw in daily, it was a full body candle that took this lower low. As full body took this lower low, the last bullish candle before the sales, this is this other block here. Price traded into the fair value gap, into the imbalance in daily, trade into the imbalance, this buys that it did, trade into the imbalance, make I'll talk about structural liquidity in another video, but today we're talking about imbalance, inefficiency, then using a POI. And this is a POI that was used. Price made this structural liquidity, the inducement, induced buyers. You see, buyers traded fairly into the fair value gap. They traded fairly. They came to balance the imbalance, came to balance it up. Then sellers took over. It trapped buyers. Buyers felt price is going to continue going up, but price trapped buyers. So sellers took over. Then came buyers, took over again. Now looked for a POI. That's why we call this an inducement. After taking out the buyers, their stop losses would have been placed under this low. Took out took out buyers. Then it now bought original the original buy bought to the POI. This POI and point of interest here. Then you see the sell. See the sell. See the sell. And this is another displacement that happened. Let's go to daily. This is another displacement that happened. Let's look for that. Yes. This is another displacement that happened. Another displacement that happened. And you see there's inefficiency. Displacement confirms intent of institutions. So you already know, so this place is going, institutions wants to sell. Okay, let me confirm the intent. Let me wait for imbalance. Then you see three consecutive candles. They they make a gap. They form an imbalance. They make a gap, fair value gap. What you do, you wait for price to balance it up, then look for a POI that overlaps there. In this case here, this daily, this is an order block. Another block. So once price trades back into this into this zone, price is gonna balance up the imbalance, then use this other block, to continue selling. So that is it for this video. Imbalance, inefficiency, you're using a POI. So if you have any questions, please drop it in the comment section. If you want to know, if you want to master it more, I have a playbook that will be left in the description. I will attach a link to my Telegram there. Go there, download the playbook, how to use, how to how to spot how to spot the break, how to spot the break, how to spot imbalance, then using a POI, displacement, imbalance, then the POI that can be used. All right, that's it for this video. Thank you for watching.